Welcome back to Trading with Artisan Will. This is the weekly watch list in preparation for the week of February 2nd. Now, normally we always have a watch list for specific stocks that I am looking at for potential plays, but I'm gonna be honest, I did a scan and I found literally nothing. There are potentially good names out there that we can look at together for short-term trades, but in terms of swings, it's really looking grim and it just doesn't look like there's much out there. So for the most part, for today's video, we're going to mainly just be doing a big picture analysis of where the state of the market is currently and my thoughts on where we could potentially go from there. So to get us kick-started, let's first take a look at the market as a whole. So this past week, we had FOMC. We also had a nice rebound recently off of the daily 50 EMA on SPY, and that was after the tariff news. So this is exactly the type of price action that we've seen for basically the past 3 or 4 months now, where we get these huge, large sell candles from news of a potential tariff, and then we rebound slowly forward from there. And I would almost argue that every single time that we have done this, it's become more and more choppy. And with the most recent time coming, it's become really difficult to actually catch some moves that actually have any type of follow through. And of course, this past Friday, what we saw on metals was just absolutely crazy. So for gold and silver, we've been grinding up for basically a very long time now, since like August of 2025. But then on Friday, we see an over 40% drop in one day on silver. So this is a commodity, right? So this is technically a flight to safety, as investors are uncertain about the global conditions right now with tariffs and tensions with other powers. And we are a little bit uncertain with everything that's going on with the Fed as well. And that's why it's so crazy that we're seeing this crazy drop happen. Like, this is what happens on meme coins almost. So the fact that this is happening on a metal name is just absolutely crazy. So as you know, for the most part, silver and metals kind of inverse the market as a whole. So the one thing that's really alarming, and I want you to take a look at this very closely, is that with this steep drop in silver as well as gold on Friday, we technically, if we see an inverse relationship, we want to see the markets have a lot of rotation, right? But that's not what happened. SPY ended up closing as a doji, but yes, we kind of tap the previous all-time high resistance spot at around 687, 688. But for the most part, that's not a very convincing candle, right? Like, not a lot of strength. And then for tech, significantly even more weaker. We actually closed under the 21 EMA. So in that sense, that's a first early warning sign that potentially this market is very weak. And the other factor that I want to take a look at is Bitcoin. So crypto has been phenomenally weak. And for the most part, for the past couple of years, Bitcoin has always kind of like front ran what the rest of the market does. Obviously, the hope is that Bitcoin has decoupled from equities, but it feels like that's not what's actually happening here. So Bitcoin ended up trying to do a breakout past this range, but ends up being a failed breakout. And now we've broken the range to the downside. And we're actually very close to touching the previous all-time high spot at around 74K. So if anything, I think that's definitely where we want to visit. We probably want to get an actual clean touch past that spot before we see any type of potential buying from there. But because of this happening, and it could be front running it, I think the markets are in for a little bit steeper of a pullback, most likely, especially in February. You have to remember that we're in the second year of the presidential cycle, and the second year has always tended to be very choppy, especially for the first 2 months of the year. And February, seeing how it might be choppy here, given that this upcoming week, we have a lot of economic data, but also a lot of large cap names reporting earnings. For example, Google and Amazon are going to be reporting midweek. And then throughout the week, we have JOLTS, unemployment rate, as well as University of Michigan consumer sentiment. So a lot of potential catalysts where if the data is not good, or these companies that are reporting kind of guide down for the next quarter and the rest of the year, that could bring the next leg down for the markets. And as of this recording of this video, you can see that we actually did gap down on NQ, and we're currently down about 1% here. We actually rejected off the hourly EMA and rejected off of Friday's lows here. So in terms of the price action here, very weak, and it seems like NQ and the market as a whole is kind of actually following where Bitcoin is going. So I would definitely keep a close eye on that. With that in mind, there is a few names that look potentially good. It's going to be the downside as well as the upside here. So for the first one, for the downside, is Meta. So This is probably gapping down given that markets are down 1%, but there's this really nice gap that we could play based off the earnings here. So this is a power earning gap. It tried holding it on Friday. So anything under 712, and honestly that mental number breaking down 700 would definitely try taking shorts to target the full gap fill back to around 675. And then in terms of strength, the one financial name that looks decent is going to be Citibank, ticker C. So right after earnings here, we've seen a lot of digestion of the move and price action is starting to get very, very tight. The only part that's a little concerning is the fact that the EMAs are now clustered and the 9 is actually under the 21 now. So ideally what we want to see is the 9 to flip back bullish and then we use kind of like the 21 as a springboard to break past this range. But the good news is as price is tightening here within this range here, volume is decreasing. So that's exactly what you want to see as volume is drying up. We actually bounce off the weekly 9 EMA here. So based off these arrows, this is kind of what I want to see. I want us to see slowly grind up towards the upper side of the range. We let the EMAs kind of separate and get some separation between them. And then we pull back to it and do like an undercut, a reclaim, or even just use that spot as a springboard. And that's where we look to take a potential long trade. But the really nice thing about this name here is because we have this earnings candle printed, we have this really beautiful range where if we do that, we play it to the upside. But if this structure starts to fail, then a close under that 110 spot is an easy spot for us to play the downside as well. But other than that, all in all, there really isn't much else out there currently in the markets here. There's just so much lack of follow through. So last week we talked about APLD, for example, this daily flag break, which we actually did get that clean break, but then just no follow through at all and a collapse of that structure. We also had Wolf, for example, tried breaking out of this little range here and this kind of trend line break, but then just no follow through and then a complete collapse again. And so because of all these individual names are showing you that there's a lack of follow through for these momentum trades and breakouts, it tells you that the market is definitely a lot weaker than it kind of looks from the outside here. And actually under the hood, there's not much really strength anywhere, especially because of the fact that with SPX, we actually broke 7,000 momentarily for this past week, but then we get this kind of pretty crazy rejections here. So if anything, for February, I'm expecting a lot more chop, but even if not chop, I would prefer actually a pretty healthy pullback because then we get a nice little reset in the markets and then we can from there, after we let the dust settle, kind of play to the upside based on what has relative strength. But all in all, if we're still playing out with how the second year of the presidential cycle goes, then towards the end of February to March is usually when we get a lot more direction and clarity to the upside. So if anything, preserve your capital and prepare for the better price action, hopefully coming soon. But other than that, that is it. Thank you for reviewing the market as a whole with me for this week. I will catch you guys in the next one.